Happy Thanksgiving and welcome back, team. There are some signals that FFIE is firing, and I would like to go over those things with you before tomorrow's session. I hope that I caught you at a good time. I hope that you've had a good dinner or are about to have a good dinner. So let's just go ahead and have a nice, relaxing stock talk for this fine Thanksgiving evening. Okay, so yeah, let's go ahead and introduce myself, right? So what is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with an FFIE, Technicals, Raw Price Action, and Statistical Threat of Analysis. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community group in Discord called ARCab. With that said, let's go ahead and dive right into the charts. So we are looking at FFIE on the 4-hour chart here, and this is the broadening descending wedge that we have been riding for some time now. And just for the new listeners, let's go ahead and just update real fast. So we are talking about something that we usually mention here called the golden rule of 3. Okay, so usually that it's in respects to Elliott wave theory. So where we test the resistance of the formation 3 times before facing a large capitulation or accumulation event, and before using our support and continuing up to the upside, thus making our 4th attempt and true breakout out of the formation. So you have a test number 1, or we have test number 1, 2, and 3, and now you can see the large capitulation event, which is usually the signal for short sellers to open up. It usually presents itself as a type of fake out or a bull trap. So if you're not following these little basic rules in a bear market in particular, then you could be trapped. This formation itself is actually it actually represents the anxiety and nervousness within the trading, within the trading psychology in a bear market. This shows nervousness, and this pattern is actually very, very common within a bear market. Now, wicks like these are also very common in bear markets as well. So these are the types of things that I want to be able to touch on with you, so that we can trade the environment accordingly, because we don't trade a bear market the way we trade a bull market. We have to in a sense kind of adjust to the way things are moving in the bear market. Okay, so now we have made a test, actually now 2 tests of the support at the very bottom. We were mentioning the possibility of using this resistance range, this support range, as a form of support before continuing on to the upside. As you can see, we have touched down right at that level. Now, we were looking at between the 2 fib and the 2.618 inverse fib ratio. We were looking at this from right over here before this candle happened. We were looking at the potentials of downside movement, in which we did receive. I haven't covered FFIE for a few days now, and it has since realized what we were talking about. We still have a larger area for bounce, though, and I can honestly be able to tell you that this could be one of the largest demand zones for FFIE stock. As you can see here, it just had a massive bounce out of this candle, touching this support zone. Now, this current price action is indicating a continuation to the downside. I believe likely to test this this support range once more, and what I'm not sure of is how deep we're looking to go. But what I can tell you is that from this day, which was around the 21st of November, I still am looking for a touch of the 2712 zone of the inverse 2.618 Fibonacci ratio at 2712. So this could likely be an area for us to wick down, similar to this failure here before we come up and reclaim the formation itself. Just like this, we come right back down, and then we rocket ship to the upside. And it is looking like it, just based on raw price action, right? Based on the technicals. Excuse me. So now let's go ahead and move on to the next chart and see what we have. So this is going to be the statistical side of the analysis. For the new viewers, I want to be able to explain a couple things to you. This is volatility that we're looking at, represented by this indicator BBWP. Volatility is direction neutral, so we pair it with an indicator like this one here, momentum oscillator, or a momentum indicator in general, in order for us to gain a bias in, or for the direction of the asset. So in the back test that I performed, which is throughout the entire trading history of FFIE, there are a couple criteria to be back tested within the volatility versus momentum profile. And that criteria is this. So we are looking at any time that we have expanded into critical volatility levels, which I consider to be anything above this 90 percentile, represented by this red line here. Anytime that we've lifted to these critical levels and started a contraction phase from these levels, I've taken note of that iteration's duration and the upside thrust versus the amount of times that the volatility versus momentum profile guessed the upside incorrectly versus correctly. Now, this entire data set actually came back. This is done by hand, by the way, so that we can be able to see a statistical variable for us to gain some or a better understanding of the movement of the asset, and also where it could imply or a price objective, where it can go, right? So we do have some interesting data coming back in the 4-hour BBWP, which is already a shorter term time frame. We actually notice that we have a total of 11 iterations, of which 7 were correctly guessed to the upside. Now, that gives us an averaged upside accuracy of 63.63%, with an averaged upside thrust of 28.998% over the span of just, 7.5 days. This is proof of work. So, the firing of the signal, the criteria is this. We needed both the volatility component, which is the spectrum line of the BBWP, and the moving average alongside stochastic momentum, both pitched to the upside and this to the downside. As you can see, we are now making an ascent on stochastic momentum, and we are also making the descent on volatility. So this is the contraction phase is absolutely in play right now, and I can see us potentially correcting once more, thus increasing volatility, and then making a quick correction into into an expansion phase, thus pushing up to the upside. Now, if we apply the 28.998% averaged upside thrust to the current position, or from the firing of the signal, which was right about at this candle here, every just real fast, every bar that you see here is a 4-hour read, since we are in the 4-hour chart. So the longer we stay at these expansive levels or these contractive levels, the larger amount of volatility is to come in. For example, here you see that we were sitting down here, trading sideways, and then it dipped, and then we started an expansion phase, and this massive green candle came in, and we made an ascent. So this is essentially what's happening, just inversely, since volatility is direction neutral. Okay, so stochastic momentum is suggesting a continuation to the upside. I have back tested volatility in other tickers, and I'm talking about probably 30, 40 tickers, and I'm getting an average read of about 75 to 90% accuracy in guessing the direction of the asset. So this is not perfect, but it's very good to consider when trading. Okay, so I, again, in price action, I still see a potential downside move, creating what some people may consider a double bottom. I actually don't follow that formation too much. I like triangles better. Triangles usually have a higher hit rate. So let's go ahead and move on to the next chart to see what we have. Oh, I'm sorry. Yes, from the firing of the signal, we can apply that 28.9% to the upside, and that puts us just above the 1.618 Fibonacci ratio, which is at about 46 cents, 46.19, and that could potentially, I mean, it does have some confluence too. You can see that we're right at these candle lows, so we're looking at resistance at this point right here. If we're able to slightly overshoot the 28.99% to the upside, potentially to the 2 fib at 48 cents or the 2.72, that would leave us a little more room for us to be able to come back and use the 1.618 as a form of support before continuation onto the upside. Now let's go ahead and just open up some some SMAs here and see what we have. Okay, so yes, we do. I mean, if we consider the 10-day simple moving average, we can actually see this as a form of I guess we can call it resistance right now, and you can see that we're using it as a sense of a guide to the way down. Another thing that can tell us that we still have some downside to go is this candle itself. The candle has retraced to this level, and as you can see, it has not returned anything from which it has lost. So that's also another potential in there. The EMA 7 and 30, let's bring up. I imagine the EMA 7 is somewhere down here as resistance as well. And yeah, so it's just below the SMA 10. It's represented by this yellow line, and it's also serving as a form of resistance for us to continue to the way down. I don't see so much downside. But I mean, considering the statistics, right? So this is these are statistical metrics. Please remember that they're not certainties. We must keep that in mind. Okay, you guys, another thing to keep in mind is that I'm not a financial advisor. Please take whatever I do show and iterate within these videos as a form of entertainment. I can't actually suggest for you to buy or sell any asset. So take whatever I do show here just as entertainment. Okay, so now let's go on to the next chart. So we are looking at the RSI analysis here, and we are in the 12-hour chart. We usually want to be able to catch divergences in a larger time frame. However, I don't like catching divergences when we're at the oversold or overbought levels. I would really rather catch these divergences when we're within the 70 to 30 percentile of the RSI. But in this case, we are working with what we got. So let's just go ahead and continue. We are looking at 1, 2. It looks like I'm going to count them here instead, because these lines actually are the inverse of this. So when we're looking for bullish divergences, we're looking for a higher low structure in the RSI, meanwhile lower lows in the price action. So we have 1, 2, 3, 4, and 5 bullish divergences in the 12-hour RSI. So this is looking pretty good. We are in the oversold percentile, so the more we dive into the oversold percentile, the likelihood of retracing is greater, of course. So now let's go ahead and open up a multi-pane to see if we can gauge a bias for direction in the closer, for closer time frames. So let's just go ahead and let's just go ahead and bring back a couple things here so that we can make some space and show an image or a diagram of the RSI properties for the new viewers and new listeners. Okay, now we can do it. Let's get rid of this here. This is just some MMAT stuff. Okay, so yes, this is my RSI property here. I blew it up here and I made the 4 zones here, which are 1, 2, 3, 4 right over here, just so that you know what I'm talking about as I'm performing the analysis here for you. Okay, so now let's go ahead and jump into the immediate short-term time frame. We're going to look at the 30-minute RSI, and you know what? Let me dim that red line down there just so that you can be able to see exactly where the RSI is sitting. Yeah, so you can see that we have a neutral direction suggestion here. We are getting a slight hint from the moving average, which is represented by this pink line, and we are at the border between the bear strength percentile and the bear weakness percentile. Usually when we're in this border coming from the upside, it usually indicates a potential continuation to the downside. Okay, so let's go ahead and move up to a higher term. This is going to be the bi-hourly, and the bi-hourly is suggesting a continuation onto the downside as well. Now, however, we have moved above the moving average, which is good, and this downside could be limited. There is the potential to where we can use the moving average as a form of support before us continuing onto the upside. We should keep in mind, though, that we are well within the grips of the bear strength percentile here. So this is definitely in accordance with what we're speaking of regarding the continuation to the downside here. Okay, so now let's continue on to the 6-hour RSI. The 6-hour RSI is absolutely in the grips of the bear strength percentile as well. It looks primed to create a bearish cross below the moving average, which is also in accordance with our downside pullback for now. And now the daily, since we already saw the 12-hour RSI, the daily is starting to ease its downside pivot. It is very much in the grips of the bear strength percentile, but this is now starting to kind of pivot. So there is a on the daily, it's looking like we're losing some sell pressure here. So now let's go to the buy daily and see. Yeah, the buy daily is also starting to pivot. I mean, also within the bear strength percentile. So we do have to keep this in mind. And also, as we approach the deeper areas of the bear strength percentile, the likelihood of us getting gravitated to oversold percentile is greater. Just like this right here. This is primed to continue. So, let's just look at the 3-day just in case. The 3-day is even less of a pivot, and I imagine the 5-day could be. Yeah. So this is now getting closer towards the shallow end of the bear strength percentile as we continue into higher term time frames. So there could be limited sell pressure here. It's very hard to tell when you're looking at an asset that has made several 52-week lows consistently. So that actually limits traders like me, systematic traders that rely on historical price action, historical price action, historical everything. You know, there's nothing here for me to look at. So it's a little difficult for us to use trend, which is a very important aspect in trading. But yes, I do expect some limited downside before us continuing to the upside. The lowest I can see this going is potentially the 27.12. So this could be a pretty good longing opportunity here for a continuation onto the upside. It's going to be a rocky road for sure, but we can see some downside first before a thrust to the upside. Okay, so I think this is a pretty good place for me to leave off the video. If you have any questions or concerns, please don't hesitate to reach out to me on Discord or Twitter. I'll make sure to leave the links in the description below. Also, so you can consider joining the ARCab trading community on Discord. But with that said, I wish you a great Thanksgiving night, and I will catch you at the bell mañana. Please remember, tomorrow is actually going to be a short session. The markets will be closed by 1 p.m. Eastern, about 11 a.m. Or 10 a.m. Pacific. Okay, so with that said, now have a good night, and I will catch you at the bell mañana. Adios.